આપણી સાથે એક્ઝામ ઓસ્ટ્રેલિયાના પીટર મેગવાયર પણ જોડાઈ રહ્યા છે, એમની સાથે પણ વાત કરીએ. પીટર, ગુડ મોર્નિંગ. વોટ કાઇન્ડ ઓફ યોર રિએક્શન ઓન Fed statement? As far as we seen, there is a two major things we are facing in now US economy. That's one is a dollar index, dollar prices, and second one is a bond yield. What kind of situation we can face in US economy? Do we see recession or we stay with slowdown?
Well, good morning. I think there's two prongs exactly, and that's going to be the great dilemma. If they keep on ratcheting rates up, what impact is going to have to economic growth? We're conscious with that US dollar index at 1111 for 111.5, 111.6, so it's had a big move. Currencies are being crushed. Yen down, pound down, euro down. So really it's having a great impact to the currency market. As far as bond yields are concerned, I'm expecting, more rate rises over the next couple of months to try and contain this ugly beast we call inflation.
Right. Peter, as far as the Fed chairman said yesterday that they are now focusing only on inflation. Now not they are seeing on any kind of watch out for the growth or economic situation. As far as that statement is that the 2023 limit is 4.6% and now 2022 its limit now on 4.4% rate hike. So do we see further more aggressive rate hike in coming policies? As far as we seen energy prices also coming down, but inflation is not coming on cool-off side. So can we expect more rate hike on aggressive side, or now we seen on normal basis rate hike like 25-50 basis point?
I think it's going to remain bullish, and I'm not going to be surprised to see additional 75 basis point hikes over the next couple of months leading up to Christmas. The inflation story is just too out of control for the Fed to sit on their hands, because you've got the strong dollar, you've got the conditions as far as economic growth to worry about, but more importantly, their whole focus, their absolute focus is on inflation, and the only way they can try and get it down in their mindset is to rapidly increase rates. So I'm sitting here saying I think we've got further upside for dollar and further upside for the rate market.
Right. Peter, one more thing on yield side, because as far as we've seen 2 years and 10 years yield are on inverted curve. Now we've seen 30 years and 10 years yield also on nearby the inverted curve. So as far as this kind of aggressive bond yield, which is since higher than 2008, so what kind of we can expect emerging markets fund flow as far as Indian market and other Asian countries? Do we see any outflow from the Indian markets?
Yeah, outflow quite simply because of the high bond yields coming out of the States, and that safety factor with a rapidly increasing Fed's fund rate, then the whole storyline could change as far as risk appetite and opportunity sweeping across emerging markets. It's probably a little bit early to call, but I think over the next couple of months it could be quite dynamic. That flood to US dollar and of course market sensitivities and market uncertainty across the globe, across equities and so on.
Right. And lastly, Peter, what kind of support or we can expect on US market? Do we see more downside as far as Nasdaq is concerned? We are in much more lower side. So what is your expectation on index sizing?
I won't be surprised to see the Nasdaq down another 5 or 10% over the lead up to Christmas, quite simply because of aggressive rate hikes. It's had a big run up since June. It's giving a lot of that hot air back to the market. It's evaporating, and I feel as though that you're going to see a continuation, strong dollar, strong rates, and weaker equity markets. So yeah, that's what most traders are keeping their minds focused on. So I think we're in for some rocky roads ahead.
Okay. Let's see how we right this thing is now. Thank you very much, Peter, for joining with us and share your views with us. Thank you very much.
Thank you, Vikram.